Good day, everyone. Ali Safi here from Safi Financial Network. Today is September 21st, 2024. Here is another weekly edition for our weekly wrap. All right, we had a pretty interesting week. Last week, Federal Reserve bring the rate down. On Wednesday, we had 50 basis point to the downside for the rate, and the concern was kind of like a job market. They said it's pretty strong, but inflation is coming down, and inflation is getting close to their target. However, Jay Powell just explicitly said that inflation is not at the level that they want. Still, they don't say we beat the inflation. It is on the process. However, job market is pretty strong. The US economy is pretty solid. So his wording was kind of like a hawkish. Verbiage was hawkish. I know the action was dovish, but the verbiage was hawkish. So that's why market on Wednesday went down after FOMC meeting. But on Thursday, just because futures market, Asia and Europe opened when North America is in midnight, they celebrate 50 basis point cut and everything went up. Like all markets actually went up together at the same time. Asia, Nikkei, DAX, German DAX, UK FTSE. And the rest actually went up very, very sharply. And that's bring optimism to US market on Thursday when New York market opened on Thursday, it was gapped up and the gap continued to the upside. However, Friday, again, market went to the pause. So everyone is just asking, okay, what's the next action? What we should do? Like usually when they bring 50 basis point down, we are heading into recession. However, this time market just celebrate for this cut. And are we experiencing a different situation right now, or this is gonna be just the ecstasy, I should say, climax, and when everything when dust settles, things are gonna go bad. So lots of betting on the bear side and bull side at the same time. But what chart exactly tells us, and what kind of like a macroeconomy we should just look at? Again, to the charts, see what chart tells us. For this, we need to give time. We need to give market time, not just specifically for this moment. I would say for the next 2, 3 weeks, even month, we can give market time to digest the idea, the intention. Folks, I'm talking for the investment perspective. If you're an investor, you shouldn't bother yourself like you are cutting your position right now because eventually market is heading to recession for a next year or two. So if you have tolerance to sit on your cash for the next 2 years to see if market gives you another buying opportunity, so you would be golden. And even if you have a tolerate to see that market is just keep grinding higher, and while you cut your position, while you're staying on the side and waiting for a recession, and the market just keep climb higher, and you can see everyone is celebrating while you're just sitting at your home and just watching the TV and see the market is going high. Do you have that tolerance? So it depends. This is a question for you, not a question for what we can do. For traders, there are always opportunities. For the long side, for the short side, you can have the opportunity. So it depends on exactly what's your style. If you're a seller trader, you always have opportunity to sell. You can scalp. If you're buyers, you can always have opportunity for long position. I would say the next 2, 3 months, especially September, October, November, we have lots of volatility. We are pre-election season, and also we just see the cut after 4 years. So we should expect lots of volatility down the road for the market. All right. So after this kind of like Saturday morning introduction, let's get to the chart, see what chart tells us. Here is S&P 500 weekly chart. We just had a fantastic week. We break through to a new all-time high. We closed it above 56.99. We just touched below 5,700, which is a fantastic level. And we were expecting this box as a like important box for the market. So this box actually drafted here, as you see, from July all the way to mid-September, even early October. So this is the area that we were expecting market is going to have lots of trouble to keep grinding higher. However, we are kind of like a middle or even at the higher middle of this box. So we should expect market keep grinding higher. However, I would say when we are getting to this area, especially 57 to 58 for September, October. So this period, specifically October, September, we should see a risk accelerating to the downside. And how far we can get, I would say we are not going to touch, at least that we are not going to touch this pivot. So we are maximum retracing to 53 to 5400. So even if we get there to 53, 5400, and when we see this 43 SMA, which is our bullish indicator for the market, is reaching out here. So we should expect potentially a drop could be kind of like another buying opportunity for the market. If we get below this 5,000, I should say 51 or 5,000 area, that would be a very bearish signal. So we should say market is topped. Then for the next, I'm just emphasizing, for the next bounce, we can sell. Right now, we are not there yet. So if you want to sell, you are kind of like a gambling. Myself, my subscribers, we took lots of short position this summertime. Some of them went very, very nicely into profit. Some of them, like right now, a half put option, which are getting probably worthless. But this is less than 2% of our portfolio. Just imagine 2% of our portfolio maximum was on short side. The rest, 98%, was in long position or cash. So this means we are super bullish at the same time for the market just because we don't see any reversal, a strong reversal for a recession. I know that lots of my videos, I'm just saying recession is coming, which I do believe recession is coming, but there is no sign yet. So why we should gamble and why we should fantasize about our ideology when reality is something else? That's what I'm saying, folks. This is not for today. This is not for yesterday. This is for tomorrow. When you are getting back to your system and you want to see the chart, it is important to see what exactly reality tells you, not what you think. This is the most important lesson for all traders and investors. Look at the chart. Don't look at yourself. Look at the chart, see what chart tells you exactly. All right. So chart tells us right now we are in a bullish momentum. We are at new all-time high, and we can get still upside target. However, I would say the dangerous period still is not coming yet. We are just beginning into dangerous position. So September, October could be volatile, and we are just getting there. We may see some kind of like a pullback to this area maximum, but we should see how market is going to react to this level. All right. So let me tell you something else. This is very, very interesting. Here is, I just want to squeeze the chart. I just want to show you here because that is important for everyone to watch this. So this is S&P 500 weekly chart. This is high, this is higher high, and right now we are just getting higher high as well. So this is called trade drive. So I post that in technical analysis courses just in the channel. You can see that it's free. I just teach you how to read this trade drive pattern. This is trade drives bearish. All right. So this is a trade drives bearish pattern. And this means when you see three higher high in price, while two indicators at the same time showing you lower high, this is RSI, this was MACD, and also stochastic is telling you the same thing. Look at IMI here. The momentum is down. And you know that IMI is kind of like a leading indicator when it tells you, hey guys, be careful. We are just in a very, very low momentum. So this means the price is getting higher and higher. I know the price is getting higher and higher, but momentum is shifting to the downside. Every single time when we are getting to the higher high, momentum is getting to the lower high. So this is very, very interesting when we see that in a weekly chart. We should see some kind of like area that reversal is coming. And this reversal, when it comes, it's going to be multi-weeks bear trend to the downside. And I believe that we are just consolidating lots of resistance on reversal points here. I just did the calculation, potentially 5839 to 5900 even. We may see 5900. I don't say we will see, but we may. So there is going to be a potential scenario. I would say next week, potentially even beginning of October, we are getting to the top and we can see the downside move, and it's going to be very, very sharp and fast. But at the same time, I have to confess that this rally was not exactly that I was expecting. This is very, very fast. This is furious. This is too much momentum, and we should give market benefit of doubt for the bull side. We shouldn't go against the market because that's going to be a suicide call, right? So this is S&P 500 weekly chart. If we go to the daily chart here, we'll see that market just recapturing these two highs, which is heading to new all-time high. And we are getting into this important area, which is 57.23 to 58.55. So this is the box, and I would say 5800, 5804. That would be kind of like a potential reversal. There are lots of resistance here based on the cycle, based on the price action, based on Fibonacci extension. So we can see lots of momentum is changing to the downside here. And if we get to the downside, if we get below this important pivotal point, we are heading all the way down to sub 5,000 level. And also when you see the divergence is happening in daily and weekly at the same time, this is pretty cool. Like we are not even in this RSI overbought condition. We are just below this overbought condition, stochastic forming a bear reversal. When in two time frames, weekly and daily, stochastic shows that we are in a bear reversal, we should just give market benefit of that for potential a day or two or even three, or potentially next week it's going to be up. I would say after Wednesday next week, everyone needs to be careful just because if correction is coming, we are going to see potential drop to this area, to this 55. And if we get below 5400, I would say we are heading to the downside. Very, very frustrated move to the downside. So 5400 on a daily chart is going to be your bulkhead. If we get to that level, and if we break to the downside, we're going to say this one is coming potentially to the downside to even 5,000 area. Moving on to Nasdaq weekly chart here. So Nasdaq is lagging, obviously. We are not getting to new all-time high. This is another warning sign that I see. Usually Nasdaq and technology leads the market, but right now market is on heavy value stocks, banking sector, and also the other names. So S&P 500 hit new all-time high. Dow Jones hit new all-time high. While Dow is leading market bleeds usually, and Nasdaq is just getting another weekly positive momentum to the upside, but we are not even above this August top. So this is interesting. We are not even above July top. We are not even above August top as well. So even if we get there, potentially we may see a double top here for Nasdaq. For S&P 500, we are getting to 5,800. I would say that's going to be a very nice bearish signal to the market. So stochastic momentum for Nasdaq, as you see here, we are just getting to over sold condition. Momentum in RSI is very down. MACD even doesn't give us a still buy signal. MACD is still in a bearish momentum. So this is pretty cool when you see Nasdaq is lagging, obviously lagging in the market. If you go to the daily chart here, so daily chart, we break through to the upside nicely, and still we are not above this pivotal point. This is my box, so potentially we may get to nominal new all-time high or double bottomish formation. I'm still hesitating, but if we get there, so we shouldn't just surprise, but the lots of resistance here. Look at this wide range bar breakthrough right at 20,112. So this is very, very interesting. 20,000 to 20,112. That's the area that I'm looking for a reversal, all right? So we'll see how it goes. Moving on to US 30, Dow just hitting the all-time high on Thursday. Friday, we just saw a Dragonfly Doji lower high slightly, so still keep itself above 42,000. But if we get a below a Thursday candle, I should say the downside move is already started. So we'll see how it goes. Keep Dow actually positive just because money is flowing to heavy value names. But look at this. I just want to show you here on a weekly basis. Dow Jones show a very huge divergence here between this MACD, look at the RSI here, and look at the price action. So folks, this is very, very exhaustive rally. Last time I saw that was here. Let me show you exactly when I was seeing this. This is after COVID crash when we saw the momentum is shifting to the downside, but Dow keeps grinding higher. So this is let me show you exactly. So this is a price action start falling off. Actually, MACD start already, and RSI start already after like 2021, middle of 2021. For 6 months, we keep grinding higher, but when it goes down, see that it goes all the way down even before COVID top. So this is the importance of divergence in weekly chart. It takes time, but when it impacts the market in a real scenario, it's going to be painful for 6 months or even a year. You will see, you will experience the downtrend, especially when this divergence is getting longer and longer and longer in a time frame. Moving on to gold, which hit new all-time high. This is another scenario that I'm just concerning, just because gold outperforming a stock market. Both of them are in new all-time high, but look at the gold and look at the market in S&P 500. So everything is kind of like shaking. Why? Because people, individuals, are shifting to the safe haven, which is gold. Gold breakthrough nicely. This is a reverse head and shoulder as we have spoken. This is a weekly chart, and this is reverse head and shoulder. This is a neckline. We spoke a lot about this. When we break through, we're gonna hit this area. Right now, gold is in my target for 26 to 2700. So this is the area, even 2700. I don't have a line here, but that's the area that I'm looking for. So 2700 could be a possible scenario, 26 to 27, for a reversal. When it reversal happens, then we should see a multi-weeks, I should say, top for gold, and gold can get all the way down to at least a 2000 area for a next, I would say, buying opportunity. And that would be kind of like with a stock market correction. So stock market and gold can go at the same time if they go to correction. Silver, very nice. I don't know why my silver chart always goes back. So silver had a very nice breakthrough to the upside. This is kind of like another bullish scenario. We should give market or silver benefit of doubt for a bullish scenario. This is a very nice reverse head and shoulder, descending one, a bull flag, breakthrough, no doubt about it. Still, the last trench is going to be this pivot. If we get above this, a pullback could be a buying opportunity. However, I'm kind of like a suspicious about $32, 32 and change, 32.50. That could be kind of like a double topish formation for silver. However, I would say any correction for precious metals, silver especially, could be a fantastic buying opportunity. We are in an inflation cycle for next 2-3 years. I'm going to show you exactly what's happening with inflation next video. Make sure watch that one tomorrow as well, because that is very, very important video, I would say, for everyone if you want to see what's going to be the next year or two. Moving on to crude, my favorite commodity right now. We are getting into a resistance area. So let me go to weekly chart first to tell you exactly what happened to the weekly chart. So this is fantastic technical reaction to this level. What level? 65 to 69. So this is the level that we spoken before. Nice trend line here. Crude just went down, stopped hunting people. Two reversal, 2 weeks reversal to the upside. Right now we are at this level, which is a 72, and this is a resistance area. So we talked about this before. Middle of this white range bar, institutional level. So crude can have a pause here potentially for next 2-3 weeks. But if crude holds this area, I would say crude holds the previous bottom in September, we're getting down potentially to 70, 69, 70, then getting back to the upside. This would be a very nice short-term trend line that wants to tackle to the upside. Everyone, all bulls and bears at the same time, they need to look at crude 76 to 78. If we get above this, we should see the cycle low for crude is finished and we are getting back to the upside. That would be very, very significant buying signal for an energy market. I'm expecting this sector would outperform the S&P 500, even gold in next 6 months or so. So energy could be one of the favorite sector, which it was one of the worst in 2024. But I would say in 2025, or at least first half of 2025, energy could be one of the best sector for the market if you want to invest or even trade. So hold back 69 to 70, getting back to here, that would be kind of like the good buying opportunity if we see breakthrough above 73. So 73 breakout could be a fantastic buying opportunity for crude. Watch out 76, 77, as I said, because that is very, very important level as well. All right, moving on to individual news. I believe this video actually is getting too much. So let me stop this. For the next video, I'm going to put individual names as well. Watch out the next one, folks. Don't say goodbye. Have a good one. Bye-bye.